Your broker doesn't make money when you win, they make money when you trade. And they've designed everything about your trading platform to make sure you can't stop. Every notification, every one-click order, every color choice on your screen. It's not for your convenience. It's behavioral psychology designed to trigger action. The same techniques casinos use to keep people gambling, except you think you're investing. The system was built before you opened your account, and it's already working. Let me show you what's actually happening every time you log into your trading platform, and why the traders who figure this out trade 70% less, make more money, and stop feeling like they're fighting an addiction they didn't know they had. You open your broker app. Before you even look at a chart, what do you see? Notifications, market movers, top gainers, price alerts, trending stocks, breaking news, all of it flashing, updating, demanding attention. You think this is helpful information. It's not information, it's stimulation. And stimulation triggers the exact brain response that makes you want to trade. Here's what your broker knows that you don't. The human brain is wired to respond to novelty and urgency. When you see something moving, something flashing, something marked as breaking or urgent, your brain releases a small hit of dopamine. Not enough to notice consciously, just enough to make you feel like you should do something. That feeling, that tiny impulse to act, that's what your broker is farming. Because every time you act, they make money. Let me show you two traders using the exact same broker. Same account size, same strategy, same goals. One trades an average of 4 times per day. The other trades an average of once per day. After 6 months, the trader taking 4 trades per day is down 11% after fees. The trader taking 1 trade per day is up 18%. Same win rate, same risk management. The only difference is frequency. And the only reason for the frequency difference is that one trader figured out what the platform was doing to them and the other didn't. Trader 1, let's call him Ryan. He opens his app every morning. Immediately he sees notifications. 3 stocks up over 5%. Bitcoin moving. News alert about Fed comments. His attention is fractured before he even looks at his watch list. He clicks on one of the movers. Sees a chart that looks like it's breaking out. Feels the urge. Takes the trade. It's 9:37 a.m. He wasn't planning to trade yet. His strategy says, wait until after 10:30 for volatility to settle. But the platform showed him something moving right now, and his brain responded to the urgency. By noon, Ryan has taken 3 more trades. None of them were his planned setups. All of them were reactions to notifications, price alerts, or just seeing something move on his watch list. He tells himself he's being active, staying engaged, capitalizing on opportunities. The reality is, he's being played. The platform is feeding him stimulation, his brain is responding with action impulses, and he's executing those impulses without realizing they're being triggered. Trader 2, let's call him Isaac. Same broker, same app. But Isaac turned off every single notification on day 1. No price alerts, no news alerts, no market mover lists, no trending stocks. When he opens the app, he sees exactly one thing, his watch list. The specific stocks or pairs he planned to trade that day based on his strategy. Nothing else is competing for his attention. Nothing is flashing. Nothing is creating urgency. Isaac checks his watch list once in the morning, once at his designated trading time, once before close. That's it. 3 times per day. And only during those checks is he looking for his specific setup. If it's not there, he doesn't trade. He's not being fed random opportunities by the platform. He's not being stimulated into action. He's just executing his plan when conditions match. No impulse trades, no reaction trades, just strategy. Over 6 months, Ryan paid his broker approximately $4,300 in spreads and commissions. Isaac paid about $700. Ryan traded more, felt busier, felt more engaged. His account is smaller. Isaac traded less, felt bored sometimes, felt like he was missing moves. His account is bigger. The difference isn't skill. It's that Isaac removed the psychological triggers the platform was using to manipulate his behavior. Here's what your broker will never tell you. They don't want you to be a profitable trader. They want you to be an active trader. Because active traders generate fees. Win or lose, every trade you take puts money in their pocket. A trader who takes 50 trades per month is worth more to the broker than a trader who takes 5 trades per month, even if the trader taking 5 is more profitable. This is why every design choice in your platform is optimized for increasing trade frequency, not improving trade quality. Let me break down the specific mechanisms they're using. First, one-click trading. Sounds convenient, right? You don't have to confirm your order, you just click buy or sell and you're in. This isn't convenience. This is friction removal. The harder it is to do something, the more time your rational brain has to intervene and ask, should I really do this? One-click trading removes that pause. It turns impulse directly into action. No time for second thoughts. No time for your prefrontal cortex to catch up and say, wait, this isn't your setup. Ryan uses one-click trading. He's fast. He's efficient. He sees something. He clicks. He's in. He thinks this makes him a decisive trader. The reality is, it makes him an impulsive trader. The removal of friction between seeing and doing means every urge becomes an execution. Isaac turned off one-click trading. Every trade requires him to click, confirm, and enter manually. That extra 2 seconds is enough for his brain to ask, is this actually my setup, or am I just reacting to movement? Half the time, the answer is, I'm just reacting. He cancels the order. 2 seconds of friction just saved him from a bad trade. Second, color psychology. Your broker's platform uses red and green for losses and gains, not by accident. Red triggers urgency and fear. Green triggers reward and desire. Every time you see red in your positions, your brain experiences a micro-stress response. Every time you see green, a micro-reward response. This keeps you emotionally engaged. You're not looking at numbers, you're experiencing emotional stimulus. And emotional stimulus drives action. Ryan checks his open positions constantly. He sees red, he feels stress, he wants to fix it. He sees green, he feels good, he wants more. He's on an emotional roller coaster that the color choices are amplifying. Isaac changed his platform color scheme to grayscale. Everything is white, black, gray, no red, no green, just numbers. When he looks at a position, he sees it's down X dollars or up X dollars. No emotional trigger, just data. This single change reduced his emotional reactivity by half. Third, real-time updates. Every tick, every price change. Your platform shows it to you in real time, constantly updating. This creates the illusion that you need to be watching constantly, that you might miss something, that things are happening right now that require your attention. The reality is, for most trading strategies, real-time data is useless. If you're swing trading, you don't need to see every 1-minute movement, but seeing it creates urgency, creates the feeling that you should be doing something. Ryan watches his trades tick by tick. Every small move against him creates a micro decision. Should I exit? Should I move my stop? Should I add to the position? He's making 10 micro decisions per trade when the strategy requires 0. The constant real-time updates are creating decision fatigue and triggering actions that hurt his performance. Isaac set his charts to only update when he refreshes them manually. He enters a trade, sets his stop and target, closes the platform, checks back at his designated time. The trade either hit target, hit stop, or is still running. No micro decisions. No tick-by-tick anxiety. Just execution and outcome. Fourth, social features. Some brokers now have social feeds. You can see what other traders are doing, what's being bought, what's trending. This is purely psychological manipulation. It triggers FOMO. It triggers herd behavior. It makes you feel like you're missing out if you're not active when everyone else is active. It's designed to increase trade frequency by leveraging social pressure. Ryan checks the social feed, sees everyone buying a particular stock, feels the pull, takes the trade even though it's not his setup. He's not trading his strategy anymore. He's trading social pressure. Isaac doesn't have access to the social features. He turned them off completely. What other traders are doing is irrelevant to his strategy. No social feed means no social pressure. No FOMO. Just his plan. Fifth, gamification. Some platforms have achievement systems. Badges for trading streaks. Leaderboards for most active traders. Daily challenges. This is casino psychology. It's turning trading into a game where activity is rewarded regardless of whether that activity is profitable. You start trading to hit the streak, to maintain the badge, to climb the leaderboard. Your goal shifted from making money to completing challenges. And challenges require activity, which generates fees for the broker. Ryan has 17 badges. He's on a 42-day trading streak. He's proud of this. His account is down. The badges are worthless. The streak required him to trade every day, even on days when his setup didn't appear. He forced trades to maintain the streak. Every forced trade cost him money. He's paying the broker to give him badges that make him feel accomplished, while his account shrinks. Isaac's platform doesn't have gamification features, or he disabled them. He doesn't care about streaks or badges. He cares about whether his account is growing. No artificial goals, no activity rewards, just profitability. And because he's not being manipulated into trading for badges, he only trades when it makes sense. His account is growing, no badges, just money. Here's the framework you need to implement immediately. 1. Turn off every notification. Price alerts, news alerts, market movers, everything. If you're following a strategy, you know when to check your platform. You don't need it to tell you when to look. Notifications are designed to interrupt your day and pull you into the platform when you weren't planning to trade. That's not helping you. That's helping them. 2. Disable one-click trading. Add friction to your execution process. Force yourself to confirm every trade. That extra 2 seconds gives your rational brain time to catch up to your impulse. Most bad trades happen because impulse beats rationality by half a second. Add the friction back. 3. Change your color scheme. Remove red and green if possible. Switch to grayscale or muted colors. You want to see data, not emotional triggers. Colors are psychological tools being used against you. Neutralize them. 4. Limit your platform access. Decide in advance how many times per day you'll check your trading platform. Most strategies don't require constant monitoring. If you're swing trading, you need to check maybe 3 times per day. If you're day trading during your trading hours only, outside those times, the platform should be closed. Every additional time you open it is an opportunity for the psychological triggers to work on you. 5. Remove social features and gamification. Turn them off. Opt out. You're not trading to collect badges or see what everyone else is doing. You're trading to grow your account. Social features and gamification have nothing to do with that goal. They're purely manipulation tools to increase your activity. 6. Use delayed data if your strategy allows it. Real-time data creates urgency. If you're not scalping, you don't need real-time. 15-minute delayed data is sufficient for most strategies. The delay removes the psychological urgency without impacting your actual execution. Here's what happens when you implement these changes. Week 1 feels weird. You feel like you're missing something. You feel out of the loop. You feel less engaged. This is withdrawal. The platform is giving you constant stimulation, and you just cut it off. Your brain is looking for the dopamine hits it was getting for notifications and real-time updates. Sit with the discomfort. It passes. Week 2, you start noticing how much clearer your thinking is. Without constant interruptions and stimulation, you're making decisions from strategy, not from impulse. You're taking fewer trades. But the trades you're taking are higher quality because they're planned, not reactive. Week 3, you look at your trade frequency compared to before. It's dropped by 60–70%. And you're not performing worse. You're performing better. Because you eliminated the junk trades, the impulse trades, the impulse trades. The only trades left are the ones that actually matched your strategy. Week 4, you check your fees paid to the broker. They're down dramatically. You're keeping more of your gains because you're not paying spreads and commissions on 50 trades that never should have happened. And psychologically, you're calmer. You're not stressed. You're not emotionally exhausted from watching ticks all day. You're just executing your plan. Ryan is still trapped in the system, still getting notifications, still one-clicking into trades, still one-clicking into trades, still watching a social feed, still maintaining his trading streak. His account is still shrinking. He doesn't understand why. He thinks he needs a better strategy. The strategy isn't the problem. The platform is manipulating his behavior, and he's letting it. Isaac broke free 3 months ago. His trade frequency dropped from 23 trades per week to 4. His win rate stayed the same. His account is growing faster than it ever did when he was active, because he's not bleeding money on bad trades triggered by platform psychology. He's not smarter than Ryan. He just stopped letting the broker control his behavior. Here's the final piece you need to understand. Your broker's platform is not a neutral tool. It's a behavioral manipulation system designed by experts in psychology to maximize your trading frequency. Every feature is intentional. Every color is chosen. Every notification is timed. The goal is to keep you active, keep you trading because your activity is their revenue. The moment you understand this, you can't unsee it. Every notification becomes obvious manipulation. Every one-click feature becomes obvious friction removal. Every color choice becomes obvious emotional triggering. And once you see it, you can dismantle it. Turn it off. Opt out. Take back control of your behavior. The traders who make money aren't the ones who trade the most. They're the ones who trade the best. And you can't trade your best when a platform is constantly triggering your impulses. Remove the triggers. Add friction, reduce stimulation. Trade your strategy, not your impulses. That's how you stop overtrading. That's how you keep your money out of the broker's pocket and in your account where it belongs.